Hey there, this is Mike Munzing with Munzing Mortgage Group. Each week I bring these videos to you, and today is September 11th, 2009. It's been 8 years since the attack on our country. It's been a kind of a crazy 8 years. Hard to believe it's been that long. But I hope that today, Friday, you get a chance to sit and be calm and think back on where you were and how you felt on that day, and remember what's happened since. Hopefully that'll bring our country a little bit closer together. I'm feeling pretty divided these days, but I hope this day really helps and heals and helps us remember what happened, who we are as Americans, helps us pull together as Americans as we should. Each week I bring these market updates to you. Once again, my name is Mike Munzing, Munzing Mortgage Group. I'd like to bring you the highlights on what's going on in the real estate market here in Orange County, California, United States as a whole, what's affecting our market. But I like to study that and bring that information to you. First, what I want to do is jump into the rates. Just each week I put up a rate sheet. I have it here. I'm not going to go down specifically, but it's on my website at www.mikemunzing.com. You can go to my website, print out my rate sheet, have it with you, keep it with you at the open houses this weekend if you're holding one, and that'll be helpful. What you also want to definitely go to my website for, it's become very popular, a lot of the agents are using it, is, I'll bring it up here, my FHA financing option sheet. You can go to my website. It's an Excel spreadsheet that is a link from my website. You fill it out and you put the details of your information and the property information. I've gone over it a number of times, but it's a great tool to have at your website. A lot of the agents are loving it, and it gets the FHA information to the prospective buyers. It gives you something to talk about. It's important to have good information to talk to the buyers about, so you can cover that, find out where they are. The more information you have, the more they'll open up and hopefully build some rapport, build some trust with you, so they'll work with you on trying to find a property. I want to touch on a quick note. A few weeks ago I put together a comprehensive FHA video, breaking down a lot of the details of that. A number of you, quite a few of you, wrote me back regarding the new FHA condo guidelines. I put some of them on my website. I posted some of them to you. Let's leave it as October 1st. A considerable amount of changes are coming down the pipe. I've been getting all kinds of different information from different investors on how they're going to handle that. It has to do pretty much strictly with the condos. Part of it is pulling off all the approvals and doing reapprovals on a spot basis. Each investor is looking at it differently, and I'm waiting to find out what their guidelines are going to be. So just be ready. Condominiums are going to be much more difficult for FHAs in the very short term, starting October 1. And let's just watch together and see what happens. I'll try to get those details to you as I get them. Okay, today I want to cover some interesting aspects of our market. I've got a little secret for you. You've been hearing on the news, I keep mentioning that we've hit the bottom. Prices have started to trickle up. Well, it's kind of true. The median price only has been heading up, and that's partially because some larger properties, in some cases distressed properties, have started to sell. And here in Orange County, that does tend to bring up our median price a bit. But what I want to do right now is my good friend Stephen Thomas. I want to bring in some of his information. I cover his information on case to case occasionally. And he put out a tremendous report. Lots of charts, lots of graphs. I want to run through those quickly. Stephen and his dad own a local real estate company down here in Orange County, a fantastic company. A lot of you may work for him, and he is just a pro and puts out great information. First, what I want to cover is a graph here. I'm going to cover a lot of different graphs, covering a lot of different items, but all are kind of pointing to the same issue, and I'll really touch on that at the end. This is the median home sales prices from 2002 until June of 2009. The median prices, you can see where they really topped off in the 06, 07 period. And at the very end, over the far side of the graph there, you can see, our current period, it's edged back up. And once again, I mentioned that a moment ago, some of the bigger properties in the last couple of months have been selling, which has pulled the median prices up. But on a per square footage basis, we're still level or trending a little bit downward in the recent weeks. Okay, this next chart is the first-time homebuyer affordability chart, which is, I'm going to touch on it real briefly. You can, not a lot of detail, but you can see at the end there, as the prices have dropped, rates have remained very stable. This goes from Q1, first quarter of 03, on out to basically Q4 of 08. The numbers are not tremendously updated, but you can see the trend, and it's continuing higher. So the far end of the graph there, you can see the trend is going higher, which means that the affordability index, homes are becoming more affordable to first-time home buyers, which is fantastic news. Okay, this next chart here is rather interesting. This is the entry-level property monthly payment analysis, and you can see this big hump down towards the end there in the first quarter of 07, and watch it just tailspin off. That's the monthly payments there. In first quarter of 06 into 07, the peak, let me read the numbers here, the peak monthly payment, principal, interest, taxes, and insurance for entry-level homes was $3,380 a month, and now, well, even lower now, but when it ended in Q4 of 08, it was at about $1,630 a month, a real nice trend downward, and now it's even trending, leveling off, but even trending a little bit lower with the great rates we have right now. Okay, now this chart is the foreclosure chart, which starts over on this side. Now it goes all the way from 89 all the way up to, well, into Q1 of 09. So if you look over to your left here, the big spike is in from 1991 to 1999 on your left. But as you go to your right, on the far side of the chart here, this huge spike is the foreclosures over the last year or so, starting basically from the end of 06, early 07, on through into 09, so the last couple of years. But you can see this massive spike, and what I'm building on is that we have properties coming down the pipe into our market, which is going to be great for our buyers. I know it seems like there's very low properties on the market right now. That is true. They're being held off the market. We're going to keep covering that as well. But this is a great foreclosure chart showing the big spike in the 90s, and now we are ramping up, and right now there's not looking like there's a whole lot of slowing down at this point. Okay, now this chart ties in very supportive way with that last foreclosure chart. This is the chart of adjustable rate mortgages that will be set to reschedule in the coming years. Now, if you look here, you can pause the video and kind of read the numbers here, but the big spike over to your right on the chart, those are those option arms, those negative amortization option arms, that if they don't modify those, if they don't adjust those with the lenders, those will be readjusting heavily. The peak is right there in about 8 of 2011, almost 2 years away, and you can see all the different types of adjustable rate mortgages will be peaking in 2011 into 2012. We've got a ways to go on those, and that is another big dark cloud for those who are still in the adjustable rate mortgages, and those who have negative equity and are underwater. That's going to pose some problems. So we've got a lot of properties that potentially could be still coming down the pipe. So once again, keep working those buyers, because properties are going to be coming. This isn't, as Stephen Thomas said this morning in our meeting, this isn't great news, but it's news you need to know. So our job is to bring those numbers to you and let you know. Okay, the final chart I want to bring you is the current unemployment situation for both the United States and California. You can kind of look from 1990, basically where I'm at, on across into early 2009. Now, the numbers at the end there, it was showing up on top of the chart, 8.9 for the United States. Currently, it's about 9.7 as of this year, and California is a little bit higher as well. But if you look at the far end, you can see the real spike at the other end. Once again, not trying to scare you, just showing that the prices of homes are going to be remaining stable for some time now. And the reports on the news that you've been hearing that prices of homes are starting to jump. Yeah, we've had a little blip, but I think what we've shown, what Stephen showed in his reports, are that there's considerable momentum working against the market doing that. Call me anytime. I'm here for you. Have a great weekend. God bless you. God bless your family. God bless our country. And have a great weekend. Bye-bye.
And I'm proud to be